Good day, you're watching Businessworld Live. I'm Jes Delos Santos and here are today's top stories. Malacanang says the government has already surpassed revenue goals for full year 2022. Heads up, motorists expect mixed movements in oil prices this week, with gasoline possibly increasing by 70 centavos per liter. Bangko Sentral Governor Felipe Medalla says it cannot be ruled out that inflation could accelerate further to 8.5% this month. And Christmas street parties are back after 2 years of muted festivities due to COVID-19. Let's begin our broadcast with the government surpassing its revenue goal for 2022. Emerging collections from the Bureau of Internal Revenue and the Bureau of Customs has already reached 3.2 trillion pesos. According to Malacanang, that figure is 2.2% higher than the full year goal. Meanwhile, grants and technical assistance reached $85.5 million this year, and in 2023, the government is expected to receive about $19 billion worth of official development assistance. The Bureau of Immigration says it processed almost 32,000 arrivals on Christmas Eve. Commissioner Norman Tancinco reports that immigration officers assigned at different international airports processed a total of 31,992 arrivals on December 24. Majority of them arrived via the Ninoy Aquino International Airport. On the other hand, over 22,000 departures were processed on Christmas Eve. Despite the long lines, Tancinco assured the public that passengers are processed carefully and efficiently, citing the implementation of the e-travel system, which he says significantly decreased the paper requirements of arriving passengers. Now, heads up, motorists, oil companies are expected to implement mixed adjustments to fuel prices this week. According to a forecast by Uni Oil, diesel prices are projected to roll back by as much as 60 centavos per liter starting tomorrow, December 27. Gasoline prices, however, may see an increase of up to 70 centavos per liter. If implemented, this would mark the second week of price hikes for gasoline. We are now at the tail end of 2022. Let's take a look back at the year that was and what 2023 holds for the economy with John Paolo Rivera, economist over at the Asian Institute of Management. Paolo, good day. Thank you for joining us.
Hi, good morning everyone. Merry Christmas.
Merry Christmas, Paolo. Now, earlier we did say in the headline, you have BSP Governor Felipe Medalla saying that, inflation, we might see inflation peaking in December. In fact, it's not ruling out the possibility that it might actually hit that ceiling of 8.5%. How likely is that? Are you projecting the same?
Well, as far as inflation is concerned for December 2022, I am projecting it to reach at least 8%. Maybe the 8.5% projected by BSP is feasible, given that oil prices continue to swivel and supply constraints have been persistent even during the holidays.
Now, given that, how do you see inflation panning out for the full year at least?
Well, given that inflation for December would pan out at around 8%, full year inflation could be posted at 6 to 6.5% annual, year on year.
Do you see at least price pressures going back to within target by next year? When do you see that happening? And when do you see a tempering happening as well?
Well, historically speaking, inflation rate has been always at its low at the beginning of the year, say January and February, because it is the months that we experience a relatively lower demand after the holidays. So I expect that inflation would start to temper by January as demand starts to slow down again as we end the holiday season.
And when do you see us going back to that 2 to 4% target band?
The 2 to 4% target band can only be achievable once we have addressed our supply constraints. Until supply constraints, particularly in food and in agriculture, is persistent, achieving a 2 to 3% inflation rate might still be a long way.
Are we doing enough on that end? Like you mentioned, food supply constraints here. The most that the government has done, of course, you have importation orders, particularly for sugar for next year. At the same time, you have the extension of the easing of import tariffs here on some basic agricultural goods. Is that enough to actually curb and combat inflation?
Well, what the government is doing as far as relaxing tariffs, importing agricultural products, it actually helps in tempering inflation that is highly driven by food inflation or food prices. However, that is only helpful in the short term, wherein we need to be more aggressive in implementing long-term solutions such as investing in agricultural development, reducing the supply constraints through higher production, the reduction in constraints to transportation in the distribution of food, and of course, an investment in technology that will allow our agriculture to be more commercialized and largely subsistence. That would definitely be able to solve inflation problems in the future that is driven by food prices.
Okay, but how exactly do we calibrate this whole importation policy? I mean, you did mention that it helped at least in tempering prices. But, like for example, the easing of import tariffs on some basic goods, it's been in place for months now, especially after we did see pork prices increasing due to the African swine flu. But still, prices remain high for some commodities despite, of course, this aggressive importation of some of these goods. Why is that?
Prices remain still be relatively high despite what the government is doing. It's because prices here in the Philippines do not instantaneously adjust. As we can see, prices are slowly declining, slowly slowing down. The increase in prices slowing down. It's because the policies that the Bangko Sentral have implemented before, the importation, is just starting to take effect. We do not expect these policies to instantaneously affect our inflation, the supply of goods. It's because it takes time. And that time, most likely, the impacts of what we have done in the previous months would take effect by January 2023.
Okay, let's see if that's going to come to fruition by next month. What will likely drive inflation higher next year? Earlier, we reported, of course, mixed price movements here on oil. It's been swinging up and down over the past few weeks here. But globally, we see prices tempering over the past few months as well. So where are the risks coming from? Is it still going to be more offshore, or we see a more prominent domestic risk here as well?
Well, for next year, it would definitely be a combination of local and international risk, considering that oil prices are still moving in the international market. There are still political issues that are persistent in other countries. And for our domestic sector, the supply problem, the value chain problems that we are experiencing until now would still persist because it would require necessary intervention from both the public and private sector to ease it.
Of course, the BSP has been doing some heavy lifting by the hiking of rates, but they've been saying non-monetary interventions have to be in place. Earlier, you did mention a number of items here that at least we can do when it comes to food supply here. But what other measures should be in place here to combat inflation?
Well, for next year, for 2023, maybe the BSP can start tempering the rise in rates because it will now be we are now experiencing a decrease in demand. So hiking rates might not be that crucial for us to temper inflation because by next year the movement in inflation will now be affected by the demand. By a lower demand. Given
that, how do you see the central bank moving for next year? Up to when do you see them hiking rates, and when do you see them pausing, or is there even a likelihood of them unwinding?
Given the recent trends and what's going on with the consumer side of things, I think the central bank would slowly temper hiking its rates, given that demand is already slowing down, and they would definitely lower it down as soon as indicators would show that the economy is now starting to go back to healthy levels, let's say, of inflation, of exchange rate. And of course, we are now seeing as early as December that the currency, the foreign exchange rate, is starting to go back to the lower 50s level.
Now, given that, of course, that all factors into our growth level here, third quarter surprised, especially for most analysts here. Do we see another shocker happening in the fourth quarter?
In the fourth quarter GDP growth, I'm seeing around a 7.8 to 8% growth in GDP, given that it's the holiday season and historically, our GDP is registering the highest growth in the fourth quarter. And on that note, the year-on-year growth for our GDP this 2022, I am pegging it at around 6.5 to 7% given the previous quarterly GDP growth rates.
But also, you have a number of projections now pointing to slower growth for next year. Even the BSP saying that that's despite, of course, forecasts that inflation will also start to ease by next year. Like you mentioned earlier, the possibility of it as well going back to within target. So why the divergence here that we are expecting slower growth next year, despite the fact that projections are pointing as well to an easing in terms of inflation?
Well, slower growth would be driven by the fact that people have already lower purchasing power by first quarter of 2023. Therefore, demand would temper, inflation would temper, and because the Philippines is a highly consumer-driven economy, the reduction in consumption due to a reduced demand by first quarter of 2023 would contribute to a slower growth in our economy by the first quarter.
Okay, now of course some analysts, even the BSP, saying the likelihood of a recession happening is quite small here, but it's really just a matter of how much growth is going to decline for next year. How are you seeing things panning out for 2023?
Well, personally, for 2023, as we close in on the pandemic, as we end the pandemic, as the economy slowly opens and return to pre-pandemic levels, the possibility of a recession, I would agree that it would be slim, but growth would be slower given the headwinds that we are currently experiencing. I don't expect a recession, but maybe it's really more of a slower growth than expected.
But can we confidently say that we are out of the woods now, that we have returned to pre-pandemic levels?
Well, personally, not yet, because number one, we have not yet declared that the pandemic is over. And number two, as soon as we declare pandemic is over, then that's the only time wherein businesses, foreign investments would definitely come in at a more aggressive level.
Now, of course, previously as well, at the start of the year, you have former finance chief Sonny Dominguez saying that we need to grow at least 6% for the next 5 years in order for us to grow out of our pandemic-induced debt. Are we on track? And more importantly, does that still hold true?
Given the recent developments in investment pledges, given the recent foreign visits of the president to the different countries, particularly in the European Union, if these foreign investments would materialize, it would be able to generate employment and production throughout the next years for our economy. And if it will materialize, it would be safe to say that we are on track. We are on track to achieving the target growth rate of 6% to be able to repay our debt obligations.
And lastly, your overall assessment of 2022 in terms of the economy and what the next year holds for us.
Well, optimistically, given the headwinds that we have experienced for 2022, I'm very positive that the Philippine economy will end 2022 in a good figure, as what I have mentioned earlier, predicting 6.5 to 7% GDP growth rate. And that is, for me, a decent figure given that we are still facing risk from the pandemic. And again, optimistically for 2023, we have been looking forward to 2023 since 2020 because we expect that by 2023, the economy would be much closer to pre-pandemic levels. Businesses would start to open more liberally. More employment would be generated, given that a lot of foreign investments can now start coming in as the Philippine economy stabilizes itself, going back to pre-pandemic levels.
All right, that is the hope, of course, that we get to usher in the new year with more cheers than jeers. Thank you very much for your time today. John Paolo Rivera, economist over at the Asian Institute of Management. Thank you, Paolo.
Thank you very much and good morning.
Now let's pause for a quick break, but coming right up after that. RCBC projects inflation to slow in 2023. More of that and other stories when Businessworld Live returns. Stay with us. You're still watching Businessworld Live here on One News. I'm Jes Delos Santos. Filipinos enjoy their most relaxed Christmas celebrations yet after 2 years of muted festivities due to COVID-19. But the health department reminds the public getting vaccinated is vital. Josh Camo with a report.
Cheers and merrymaking fill the air as Manileños welcomed Christmas with a festive street party. In Barangay 557, both young and old danced to a DJ dropping beats. This is the barangay's first relaxed holiday celebration since the pandemic began.
Talagang excited yung mga kabarangay dahil after 2 years under pandemic, ngayon lang muling naging masigla ang barangay.
Alex, a former resident, says he still returns yearly to Barangay 557 to celebrate Christmas with his family.
Tradisyon talaga namin dito na every Christmas, New Year, dito mag-celebrate kasi sobrang saya dito.
In Barangay Bumper 463 Manila, residents also took their party to the streets. Children eagerly played games.
Kasi po Christmas, tapos para di ba dumaan ang pandemic, walang mga ganap. Kaya ngayon, ito kasi tradisyon namin to taon-taon. Kasi po, back to normal na!
Of course, there's also people singing and reunions being held. Even their barangay chairman joined in on the fun, giving away cash prizes.
Almost 50 years na namin ginagawa to. Kaya kung mapapansin nyo, maaliwalas yung kalye, walang mga sasakyan. Talagang sineselebrate ng mga pamilya yung ang selebrasyon ng Kapaskuhan. Ngayon, siguro, patulong na rin sa mental health nila na medyo, kasi kung patuloy tayong kakapit sa pandemya, hindi tayo makaka-move on.
Amid all the holiday festivities, the health department reminds the people to be vigilant of their health.
Maging mindful po tayo sa ating mga kinakain upang masaya nating maipagdiwang ang isang ligtas Christmas.
And with most parties now being held face-to-face, the DOH reiterated the importance of COVID-19 vaccines.
Vaccines remain to be our best defense against COVID-19. Get the job done and get your boosters done para sa isang ligtas Christmas.
For News 5, Josh Camo, we are One News.
RCBC projects inflation in 2023 to slow to an average of 4.5 to 5.5%. The projection falls at the lower end of the government's target of 4.5%. RCBC Chief Economist Mike Ricafort says he sees inflation averaging at 7.2% in the first quarter but sliding down in the succeeding quarters all the way to 3.4% by the end of 2023. Ricafort says inflation will ease largely due to easing of global crude oil prices that have recently reached near one-year lows. Ricafort adds that the recent recovery of the peso from a record 59 peso level against the dollar could help ease inflation moving forward. Now this from the Philippine Star, the Energy Department pushes for the development of new petroleum service contracts in the country. This as the government works to move forward with oil exploration activities in the West Philippine Sea. Energy Secretary Rafael Lotilla said they are hopeful for progress on exploration and development in all areas which may not be necessarily tied with ongoing talks between China and the Philippines. Lotilla also said a number of companies from China have presented their interest in investing in areas like renewable energy, offshore wind, solar, and other technologies. Lotilla, however, said that the government is still working with concerned parties on developing service contracts in the disputed waters. Lotilla also said the Department of Foreign Affairs is taking the lead in negotiations on a joint exploration in the West Philippine Sea with China. Real estate developer Arthurland Corporation has listed 3 billion pesos worth of ASEAN green bonds on the Philippine Dealing and Exchange or PDEX. A substantial portion of the proceeds will fund the company's new sustainable residential projects that the company will develop and launch within the next 10 years. This bond offering marks the second tranche of Artalan's 6 billion peso ASEAN Green Bond Program, which established the first green framework by a real estate company. It comprises two tenors, 5 years at 8% per annum and 7 years at 8.76% per annum. The Securities and Exchange Commission warns against unlicensed crypto exchanges following the collapse of FTX. According to the SEC, several unregistered crypto exchanges have been targeting Filipino investors through ads on social media. The Commission says these entities tend to offer different products and schemes which are high risk and sometimes fraudulent. The Commission urges the public to check whether the entity is registered with the SEC before engaging or transacting. And those are the biggest stories on the economic and corporate front today. I'm Jes Delos Santos. We are One News, all sides, all the time. Don't go away. We'll give you the latest on the financial markets when Business World Live returns. Stay with us. And you're still watching Business World Live here in One News. I'm Jes Delos Santos. Again, trading closed for the local markets, at least for today. That's after the president did declare a special non-working holiday. But you know what? We're not alone. Most indices in Asia Pacific also on a trading break, save for a few major markets like Japan and China. Having said that, let's have a quick check here of how Japan is doing, at least edging higher here, despite more muted gains here. Quite flattish, in fact, for the topics. The Nikkei, however, starting the day up by 0.4%. That follows, of course, that surprise adjustment to Bank of Japan's 10-year yield target. Now, there's rising speculation that BOJ will be raising rates by next year. It's after inflation accelerated to its fastest pace yet since 1981. Also, Korean markets also open for today. However, starting the day here in the red for the Kospi, down by 0.1%. Over in China here, markets starting at the day at least edging higher here. That's despite, of course, a wave of COVID infections now rattling Beijing here, and they're now rising. That's increasing concerns here on whether or not Beijing can handle its shift to zero COVID policy. Beijing likewise will be also halting its release of daily case numbers, making it harder for investors to assess the health crisis's impact on the economy. As you can see right here, Shanghai at least up by close to 0.3%. The Shenzhen likewise increasing by 0.4%. Like what I mentioned earlier, their local markets closed for today. Let's see, however, how shares will be faring tomorrow as trading resumes. That's after it corrected Friday down by 0.5% to 65.41. As you can see right here, stocks to watch for next week. PLDT still over that budget overrun saga, with the telco giant now eyeing to nip a possible class action suit in the US. Also, we might as well be watching on airlines tomorrow. That's after it reported 32,000 arrivals on Christmas Eve, with 20,000 departures as well. Lastly, a quick summary here, year-to-date performance, at least here for the index, down so far by 8.2% year-to-date, with Semirara still proving to be the bright spot here for the index, up by close to 64%. Converge, on the other hand, worst performer so far this year, down by 56%. And that's it for today, December 26, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jes Delos Santos. Stay safe, Philippines. We are One News, all sides, all the time.